Welcome back to the channel, everybody. Thank you so much for joining me and allowing me to continue to be your daily advocate. If you're new here or you're not subscribed for any reason, please do me a huge favor and hit the subscribe button. Thank you to all of you who have been watching and following me for so long. It truly means a lot, and I'm glad that I can be this person.
In the news today, we had Brad Garlinghouse appearing on Fox Business, and this is courtesy of XRP Gucci. That's a nice clip here snipped out. This is really a great conversation. If you have the chance to watch the full thing, I'd recommend it. It's with Charles Gasparino on the Claiming Countdown, and he talks about a few things. One he mentions here is Gary Gensler on Jon Stewart just yesterday. If you missed that, that's lengthier and that's worth a watch for sure. But he talks on that real quick, and then he also mentions something that I think we know about, but the broader community of crypto investors and even the general public maybe isn't as familiar with. The fact that Brad Garlinghouse himself spoke with Jay Clayton and was never told anything about XRP being potentially a security in advance of the lawsuit proceedings and investigation. So we'll listen into this. It's a quick one. This is only a 30-second segment, but worth a listen. So let's go ahead and hear what Brad has to say in his own words here.
See, I mean, he was interviewed yesterday, Gary Gensler was, or maybe it was even this morning, and commented that, hey, we're going to lose some cases. This is the definition of regulation by enforcement.
He was going to lose. You think he was saying he's going to lose your case?
I don't know what. Well, the irony there is, like, we were in the SEC's offices. I met with Chairman Clayton. I was meeting with commissioners. No one ever once said, hey, we think XRP is a security. And they look backwards and say, now we think it's all a security. That's a hard argument.
So a couple things to get out of that one. One, the fact that Gary Gensler himself even acknowledged in this recent interview that, yeah, they're going to lose some cases. Now, they're hypothesizing here in the interview, well, do you think it's this one? Brad's not going to answer that. But, you know, it very well could be a big loss for the SEC in this Ripple case. So that's one thing. And then another, and again, pointing out to them and to the people listening, which are not necessarily people, you know, exclusive to the XRP community. This is a broad audience of people interested in business as a whole, telling them, hey, we met with commissioners. He talked about Clayton, but we know he met with Elad Roisman. We're still waiting on a decision there on those Easterbrook notes. So he's had conversations, you know, years ago up to the point of this lawsuit. And so at that time, nothing was said, and there was no indication, there was no fair notice. And so he's even going out and publicly saying this. So really interesting to hear, and I think Brad does a great job when he makes these appearances. I hope he gets on some other programs as well to continue to talk about what's happening. But let me know if you saw the whole segment, what you thought down below. From the other portions, if I missed anything here, obviously we didn't go through all of it. And then let me know your thoughts about the Gensler interview as well. Now, Charles Schwab is prepping its first crypto product. This is an interesting one because it's an ETF that seeks to track various equities engaged in the world of digital assets. So it's called their Crypto Economy ETF. So an incomplete prospectus was filed just Wednesday of this week, so that would be yesterday, with the SEC, and Charles Schwab's ETF would invest in stocks that are included in the Schwab Crypto Economy Index. Miners, exchanges, blockchain developers, and other crypto companies will comprise that yet-to-be-formed index, the filing said. In short, the planned ETF would offer Schwab's massive client list or client base tailored exposure to the crypto economy, though not to any coins. So that's the key thing here. This is a crypto equity product. It's the first step as we see broader adoption as we get these equity ETFs in the crypto space. And then hopefully as we move further on down through time, we eventually get these spot ETFs that keep getting proposed but never get accepted. That would be the real thing that we're waiting to see to prove that true adoption, not just on the company investment, but the actual assets themselves. We've got the futures-based ETF, but we need a spot one. So we're waiting for the SEC to finally come to some kind of agreement with somebody on that. And speaking of the SEC and not getting things done, they are currently considering crypto recommendations for their custody rule. So the SEC is looking at these new recommendations for investment advisors, investment companies. William Bird-Thistle, who is the director of the Division of Investment Management, remember this would be the equivalent of like your Division of Enforcement, Division of Corporation Finance, people like Bill Hinman, except he's over investment management at the SEC, addressed the emergence of crypto in an address to the Investor Advisor Compliance Conference. The Division of Investment Management oversees rulemaking related to investment advisors. During his remarks, he said he is considering ways to bring order to the crypto industry. For investment advisors, I am cognizant of questions about how providing advice regarding crypto assets impacts compliance with the Act, particularly aspects of the custody rule. The custody rule, also known as the Advisors Act, requires advisors to hold a client's securities with a designated qualified custodian. Qualified custodians are essentially banks, broker-dealers, and trusts licensed on the federal and state levels. Some crypto firms have already nabbed that designation, like Coinbase's custody service and Anchorage Digital Bank, but in the past it's been unclear how the SEC views the designation on a state level. The SEC asked for public comments on qualified custodians as they relate to digital assets in the wake of Wyoming's decision to grant a no-action letter to Two Ocean, which is a wealth management firm that's facilitating crypto investing and positioned itself publicly as a qualified custodian. The questions in that letter solicited feedback on how digital assets are held in custody and what protections are sought out by advisors when looking for a custodian. So he said he plans to consider recommendations related to a variety of comments received on topics related to securities use on digital asset venues, the expanding opportunities to invest in securities directly using digital platforms such as robo-advisors, online brokerages, and mobile investment apps and portals also present challenges. I look forward to considering recommendations in light of the comments we've received in this area, he said. So it's not just the enforcement division, it's not just the corporation finance division, but you also have the investment management division at the SEC looking at crypto very thoroughly. That's important to know and understand. Every aspect of our sort of financial life that is covered at the SEC is being picked at by the division heads. And so they are talking about it, they are trying to figure things out and create some policies there. Now we just hope that you don't have people like the chair of the SEC pushing them in a direction that will hurt investors. Now here's a quick one. Ripple, the company, I don't know why they have XRP in parentheses here, but Ripple seeks to collaborate with Congress on smart crypto regulation. So just recently, Ripple's head of public policy, Susan Friedman, stated that many entities in the crypto space, including Ripple, seek to work proactively with Congress and regulators on smart regulation for a digital asset space that both fosters innovation and protects consumers. She tweeted out, "Many folks within crypto, Ripple included, are looking to work proactively with Congress and regulators on smart regulation for the digital asset space. This isn't the Wild West." She said that this isn't the Wild West as claimed by Gary Gensler, like he did in September of 2021 when he was testifying before the Senate, but also pointing out, there's opportunities. She is head of public policy for Ripple, and so that deals with the lobbying, with the working with members of the House, members of the Senate, trying to get legislation passed that will be beneficial for an open and innovative digital asset space here in the US. So we wish her the best. We've seen a few nerves kind of struck as Brett Garlinghouse, yesterday we talked about, reacted to some of the commentary we've seen from people like Elizabeth Warren. And this was even part of that interview on Fox Business that wasn't in that clip, where he was talking about people just not understanding how crypto works. And that's why you see all this FUD coming out of DC when it comes to things like Russia, where there are concerns about bypassing sanctions, utilizing cryptocurrency, and just not knowing how things work. And so that's part of the education and collaboration that really does need to happen. So at least Ripple is being proactive in taking those steps. And now finally, here in Bloomberg Law, this is a great write-up. It's a little bit lengthier, but it's worth going through because I like the detail he goes into, and it really talks from a legal standpoint about what's happening in the case. So this one's called Ripple's Historic Showdown on SEC Crypto Overreach Heats Up. It's going to be linked down in the video description if you want to check it out. But this is written by someone who actually has a legal background, who can speak to these things. He has a law firm that's devoted to Supreme Court and appellate practice with no interest or stake in Ripple, the company. And so you have a more objective point of view here from someone who actually does have a real legal background. So let's go through it real fast. Cryptocurrencies had a breakout year in 2021, which saw total crypto market cap rise above $3 trillion for the first time. And while crypto values declined since then, little suggests this is anything more than one of the temporary hiccups that have been happening since 2011 during crypto's remarkable decade-long rise. Now more than ever, it is clear that the use case for digital assets and decentralized ledger technology have brought blockchain beyond mere speculation toward mainstream corporate adoption, and 2022 is set to be a year for critical legal and regulatory transition that could decide whether this remarkable technology's growth path will continue accelerating in the US or be diverted overseas. Speculation and uncertainty, originally created by the Trump administration's failure to provide clear guidance on crypto regulation, could be laid to rest through one of the Trump administration's worst crypto moves, a misguided enforcement action the SEC brought against the enterprise blockchain software company Ripple over sales of the cryptocurrency XRP. Remember, and what he's referencing here, I know he's associating it with the executive branch, specifically in his write-up, but Jay Clayton was chair of the SEC under President Trump at the time, so that's why he's saying all that there. This suit, which the SEC brought in the name of investor protection, saw retail investors lose $15 billion in value, and it tests whether the SEC has any authority to regulate crypto and whether its dangerous approach of regulation by enforcement should be allowed to continue. The investing community had hoped the Biden administration would prove a steadier hand, provide some regulatory guidance on the scope of the SEC's authority over crypto and end the misguided Ripple enforcement action, but Biden's pick for the SEC, Gary Gensler, instead has doubled down on the previous administration's mistake. So this year, it looks like the SEC's enforcement authority may have to be settled in court in the legal battle between the SEC and its hard-fighting target Ripple, currently raging in the Southern District of New York, which is likely to reach the U.S. Supreme Court. What is at stake? Is XRP a security? At stake is whether XRP is a security that must be registered with the SEC. Both Trump's SEC and Biden's allege that it is, based on a test the Supreme Court adopted in the Howey case, which provides that a security is an instrument allowing issuers to use the money of others on the promise of profit. The SEC Act says XRP meets the definition simply because Ripple makes and presumably uses money from others within each batch of XRP it offers for sale, and that position would give the SEC omnipotent power over crypto because every issuer benefits from the issuance of their cryptocurrency. But while Ripple no doubt finds use for the money its XRP generates, Howey's touchstone for a security is not the results of what issuers are selling, but what purchasers are buying. A promise of profits. Apple stock is a security because it gives shareholders a stake in Apple's business, one that gains value based on Apple's performance as a business. But XRP's value has nothing to do with Ripple's performance. The most important sentence here, XRP's value has nothing to do with Ripple's performance. That value derives from how XRP performs. That should keep cryptos beyond the SEC's grasping reach. Hopefully, the district court will agree, setting up a critical test case, allowing the Supreme Court to resolve how its 75-year-old test applies to revolutionary blockchain technology. And
So enjoy your day, everybody. I'm always here for you. Leave any comments or questions below, and be sure to subscribe. But thanks, everybody. I really appreciate you. Enjoy your day, and I always have your back. So thanks so much, everybody.